Okay, bunch of stocks to talk about. Let me welcome on board then Sandeep Sabharwal as well and find out what he's making of the market and individual stocks. Sandeep, hi, good morning. Let's start off with TCS. Quite the mixed bag. And the thing is that IT stocks have already, run up quite a fair bit in the last few odd months. How do you think TCS is positioned?
TCS results, I think, more like a half glass half full kind of results, where although the delivery was in line with expectations or slightly lower, the margins held up and order booking was reasonably strong. And the commentary on discretionary spending picking up, that uh, if it becomes a trend, could be somewhat of a positive. And the good thing, which I also pointed out earlier, was for most of the exporters, including for service, especially service exporters like IT companies, is that the recent decline in the rupee will aid their margins going forward, which was missing for the last 4 quarters. So overall, I think reasonable could create some small upside in the near term. Uh, Most analysts have a mixed picture, but I would think that it's not a bad set of results, and dividend also is quite good. So overall, the stock could, I think, at the current valuations, deliver a low double digit kind of return for this year.
Okay, so nothing too negative in the earnings, and yes, that 76 rupee dividend is something that does lend support to the stock price, though it's been a bit soft, went weak into the earnings, and that might just also provide one of the supports on the upside today. But Sandeep, what do you make of the city gas distribution space? And I mean, all of these flip flop in terms of policy and regulatory action just make it difficult to own a stock like that as an investor.
That's one of the major reasons why I don't own too much of PSU stocks, because you never know what's going to happen. Sudden cut in allocation, then sudden increase in allocation. If you look at oil marketing companies, they had become so fancy at assuming free pricing regime, but then prices have been frozen for fuel for years now. So I think that makes investing in these companies very, very tough. And even if you invest, you can't ascribe very high valuations to these companies. And I think that challenge will continue going forward.
That challenge will continue, the policy overhang.
Sandeep, do you sense that with heightened volatility, defensives or other staples, I should say, they will see some amount of, bottom fishing, etc.?
It's a very likely scenario because these stocks are also beaten down. Expectations from the results of these companies are very low, and they are very, very underowned today. So if you look at mutual fund portfolios across the board, you hardly see any FMCG stock in the top 10, top 20 also, except some allocation in ITC. Except that, the ownership also is very low. Like we've been talking earlier, also last 2 years have been of subdued growth for FMCG companies. So there will be a natural revival, I guess, this year. And if that gets combined with some moderation in inflation, good agri growth, and some possible tax relief, which we should not build in, but in case that happens in the budget. So on a holistic basis, the downside risk is much lower than upside potential in the across the board in the consumer FMCG side.
This morning, Sandeep, Macquarie has initiated coverage on IRCTC as well. They're calling it one of those monopoly players and saying that the ROC, ROE, etc. on that one is going to be quite strong. Would you buy such names?
ROE, ROC would have always been strong because uh, they obviously operate in a monopolistic structure. However, the thing we have to evaluate is that what will be the growth? Like, what is the growth in ticketing revenue? What's the growth which comes through the catering business or any other ancillary business? So it will be maybe 2 to 5% per year. So what kind of valuation we want to give to such companies, something which people need to decide. The stocks corrected a lot from the top, so there is a possibility that when PSUs bounce, this stock will also bounce. But as a standalone story, there's nothing exciting about it.
Sandeep, with the earnings ahead, where is it that you're hoping for a positive surprise, or rather, I should say, expecting one?
In terms of results, you're saying?
Yes, earnings, yes.
So earnings, I would think that in general, the expectations are pretty low. So we could actually see that for most of the sectors, which could be maybe consumer names, which could be maybe select IT companies, they could do somewhat better than what people are expecting. We could see some negative surprises coming from the metals basket or cement. Even we could see some positive numbers coming from real estate, but then their sustainability will be something of a question mark. I would think that telecom profitability should improve sequentially, and the pace of improvement we need to see how it happens. On the engineering infrastructure side, I think there are some concerns about execution, etc. So that's where the results could be a bit dicey to predict in this quarter.
Fair enough. But would you be a buyer incrementally in some of these industrials and capex themes? I mean, I'm not sure whether L&T will see a decline today or not, given the controversy and the expectation of a 90-hour work week. But, fundamentally, would you be a buyer incrementally in some of these capex and industrial names?
Yeah, I think so, because I think the cycle is still strong despite some slowdown in order flows for these companies in the near term. But directionally, because they are sitting on strong orders and the execution is likely to be strong in 2025 because we don't have election related disruptions this year. So the on corrections or at lower levels, many of the construction, industrial, engineering companies, the story is still intact, I would think.
Story is still intact, but on that note, Sandeep, we'll let you go. Thanks so much for joining us today.
If you like this video, then like, share and subscribe to ET Now.